Armstrong's models, predicting global economic shifts. Now the Oracle of Princeton, decoding economic cycles. Martin Armstrong has never been a Wall Street insider. He's been something stranger, the outsider who kept being right when the insiders were wrong. From his modest office in Princeton, Armstrong built what became known as the Economic Confidence Model, ECM, a cycle based on 8.6 years, 141 days, derived from the mathematical constant pi. What's radical about the ECM is its track record. Armstrong flagged the 1977-1980 commodity blow-off, the 1987 stock market crash, the collapse of the Japanese bubble in 1989, the 1998 Russian default and LTCM implosion, the 2007-2009 global financial crisis. Each of these was predicted not through intuition or Keynesian theory, but by the model. Armstrong didn't sit in Davos or chair the Fed. He simply followed the rhythm of capital flows, which, like tides, follow cycles older than any politician. Mainstream economists dismissed him, yet time after time events lined up with the ECM's dates. That consistency, more than anything, has built Armstrong's following. He isn't telling stories, he's showing a machine that hums beneath history itself. For a full deep dive into Armstrong's thinking, check out The World According to Martin Armstrong. Understanding the Machine, How Armstrong's AI Works. Armstrong's genius wasn't just building the ECM, it was teaching a machine to think in cycles. That machine is Socrates, his AI system that ingests centuries of data, market prices, government debt records, interest rates, even war cycles, and climate events. The pi cycle. The ECM is built on pi 3/141. The logic is that human confidence ebbs and flows in predictable arcs. Each 8.6-year wave is subdivided into quarters, 15 years, eighths, 1.07 years, and so on. Each marking potential turning points. Example, October 1987 crash, exactly aligned with an ECM turning point. July 1998, Russian default, Asian contagion, LTCM collapse. April 2020, COVID panic, market crash, oil futures going negative. Socrates versus humans. Where mainstream forecasters apply ideology, Socrates applies math. It doesn't care if you're Keynesian, Austrian, or Marxist. It weighs patterns. It tracks capital flows, not national borders. If money flees Europe for U.S. equities, the model notes it. If war breaks out in the Middle East and oil spikes, Socrates fits it into the broader cycle. It thinks like a market, not a man. As Armstrong likes to say, the ECM doesn't predict what we want. It predicts what we will do. Armstrong's philosophy and cycle research are unpacked in detail in The World According to Martin Armstrong. Case studies. When the model was right to understand the gravity of Armstrong's work, consider these historical calls. 1987 stock market crash. Armstrong warned his clients months in advance the Dow fell 22% in a single day. Japan's lost decades. Armstrong said Japan's 1989 top would not recover for decades. He was right. The Nikkei peaked near 39,000 and still trades far below that level today. 1998 Russian debt default. The model projected a crisis. Russia defaulted, LTCM imploded, Wall Street trembled. 2007, 2009 financial crisis. Armstrong's ECM aligned perfectly with the timing of the collapse. He wasn't just warning of a housing bubble. He said sovereign debt and banking fragility would detonate together. 2010, European sovereign debt crisis. From Greece to Italy, Armstrong's warnings of contagion proved true. These aren't cherry-picked, they form a pattern. Armstrong's calendar, dates aligned with tectonic economic ruptures. Current quakes, what the models are signaling now, September 2025. Here's where things get serious. According to Armstrong, late 2025 and 2026 are a major hinge point. Inflation and currency. Inflation hasn't been tamed, only masked. Government debt is the true driver. Europe is buckling under obligations that can't be paid. The dollar remains the safe haven. But Armstrong warns it will rise not because of strength, but because of collapse elsewhere. Markets' U.S. equities may continue rising in nominal terms, but volatility is king. Armstrong projects the Dow hitting 40,000, 45,000, and even 62,000 by 2032. But don't mistake that for smooth sailing. Expect corrections that will shake out the unprepared commodities. Silver is in the spotlight. Armstrong argues suppression can't last forever. Once confidence shifts, capital flees paper and flows into hard assets. Silver's setup now mirrors conditions before explosive historical runs. Gold remains a store of value, but silver's leverage to confidence collapse makes it more dramatic. Geopolitics war cycles are accelerating. Armstrong ties conflict to debt collapse. Governments under pressure find war a distraction. The U.S. is reasserting the Monroe Doctrine in Latin America. Venezuela, Cuba, Panama Canal, all are back in play. Taiwan and Ukraine remain powder kegs, not anomalies. The bottom line, Armstrong's models don't see calm seas. They see waves cresting simultaneously across markets, debt, and geopolitics. For Armstrong's forecasted roadmap through these storms, see the world, according to Martin Armstrong. Navigating the tides, preparing for the predicted shifts. So how do you position yourself? Armstrong's central advice is simple. Diversify, stay flexible, and think globally. Don't trust governments, don't cling to ideology, follow the cycles. Investments avoid sovereign debt. Bonds are ground zero for collapse. Equities may survive better than debt. Stay selective. Silver and gold, safe havens when confidence collapses. Careers adaptability matters. AI, regulation, and global trade shifts will disrupt industries. Don't bet on government stability. Public sector jobs are no longer risk-free. Personal finance debt is danger. Rising rates and falling confidence make leverage a trap. Liquidity buys freedom. Keep optionality. Sector snapshots, real estate, too much risk, too much debt. Tech, strong but vulnerable to regulation and capital flight. Energy, commodities, tailwinds ahead. Tangible beats paper. Armstrong often says, you cannot escape the cycle, you can only prepare for it. Armstrong's philosophy, cycles as destiny. What makes Armstrong unique is his conviction that cycles are destiny, not in a mystical sense, but in the statistical weight of human behavior. Governments rise and fall when confidence collapses. Wars erupt not by accident, but on schedule with debt and resource cycles. Markets don't crash because of one headline, but because the cycle is ripe for collapse. Armstrong rejects conspiracy theories. He says elites don't control the cycle, they ride it, and when they fight it, they lose. This philosophy is radical in a world that believes central banks can control outcomes. Armstrong says the Fed can't stop the tide. They can only splash in the waves. Beyond the numbers, the human element, and future outlook. The ECM isn't perfect. Black swans exist, but Armstrong's work shows that most black swans are simply events mainstream economists failed to anticipate. To Armstrong, there are no accidents, only cycles misunderstood. As we enter late 2025, the ECM is flashing red. Sovereign debt, inflation, war cycles, and capital flight are converging. This isn't random, it's the rhythm of history. So the lesson is clear. Don't rely on government promises. Don't trust static models. Watch the cycles. The next decade will test every assumption. Those who understand the tides may ride them. Those who ignore them may drown. To understand the philosophy and see the forecast, in Armstrong's own words, grab your copy of The World According to Martin Armstrong. Closing. Armstrong has been called a prophet, a pariah, even a heretic, but above all, he's been a forecaster who forced the world to confront the uncomfortable truth. Our future is written in cycles. Late 2025 marks another turn. The wave is cresting. The only question is whether you'll be ready when it breaks.